So we still have a major bounce in motion with Bitcoin pushing up almost most of the retracement, coming all the way up into the $56,000 region. Can it reclaim the overhead resistance? That is the question. And are we about to witness a V-shaped recovery? That might be the other question, because we've seen some major changes coming from the Bank of Japan with a new announcement which just came in, which will affect the markets. So stay tuned till the end of the show. Smash the like button, hit the bell notification, and subscribe to the channel. And let's get straight into the show content. Looking at the banter bubbles, well, you can see a lot of coins still putting in those double digits over there on the daily. And if we go into the weekly, most of the coins still sitting red. So a lot of work to do to reclaim some of those weekly levels which were lost. And then, of course, the monthly is not going to look too different, right? Only the strong outliers that have been putting in major moves over there are, of course, still pushing towards the upside. And we have the Nikkei 225, which of course was in a major crash mode. We outlined the parabolic advancement that this has been following all the way since 2010. That's following, of course, the crash that occurred in 2008 that was affecting the global markets. And since then, it's just been grinding onwards and upwards, coming back into a very key horizontal level over here at major support at 31,223 points over there, wicking down into that level, and consequently since putting in a pretty substantial bounce up 12%. This is big moves for the stock market. So the question is, are we going to see a deeper breakdown, or are we going to see continuation and a move higher out over here on the Nikkei 225 index? I lean towards the latter, which would be a move higher up. And the reason why is, if you look over here, the Bank of Japan deputy governor now just came out pledging to refrain from raising the rate hikes any further because of the instability of the markets. Of course, any time that you raise the interest rates, it is going to cause instability in the markets. And if they don't do that, of course, they're likely to lead into runaway inflation in the future. And this, again, all roads lead back to Bitcoin, showing why Bitcoin is such a bullish long-term bet, right? No funny money, hard money over here that you'll be looking to hold for the long term, that you can't just print outright, right? The miners have to mine it, and there's proof of work involved. And this, of course, has allowed the US to shift their stance. And if you go through to the interest rate hike probabilities, we're looking at potentially a 50 basis point cut coming at the next meeting over there on the 18th of September. I think yesterday this was sitting somewhere around 76%, now coming all the way down to 63.5% due to what Japan have just announced and done. So essentially Japan doing the dirty work over there that the US haven't had to yet. And there's a correlation between the Nikkei and Bitcoin over here. The Nikkei pushing all the way up to the 0.618 fib retracement level. Bitcoin still slightly lagging at 0.618, coming in at $59,000, which is going to be major resistance. So you can kind of use the Nikkei as a little bit of forward guidance to see what may happen next for Bitcoin. They seem to be trading very correlated at the moment. And Arthur Hayes, who yesterday was very bearish given all the Japanese news, has come and pretty much shifted his stance given the newfound information that's come out within the market. He said over here, just so that I'm clear, BTFD, right? Buy the dip, because the Bank of Japan caved. He says he'll follow up with a new article essay coming out next week, speaking about the US Treasury quarterly refunding announcement and the injection of $300 billion to $1.05 trillion, which is coming between now and the end of the year. So major buybacks of stocks. We did speak about that yesterday as well, and how that would essentially drive markets up over time. That is, a minor form of quantitative easing, which is taking place in the market. And here you have the S&P 500 and NASDAQ also starting to put in a bounce. We spoke about the 1 to 4 candle correction, which we've pretty much come to the end of that. We were looking for this week at a push, next week being the end of that, before putting in a major bounce for the stock markets. Dow Jones as well over here approaching the 200-week moving average. So we will keep a close, keen eye out on that. And one of the major things to be watching as well is going to be the DXY, right, which tends to drive all markets. You can see breaking down from this symmetrical triangle. We gave the hammer over here, hit that level over there, looking for the rejection into, at the time, what was this underside retest. Perfect rejection from that level, started to break down. Now we're looking for the same thing to potentially occur over here as the DXY does start to push up into this region over here, looking for weakness in the 103.6 to set in a lower high and then hopefully go for a deeper breakdown. This makes it much easier for risk on assets to rally when the DXY is coming down. That money has to flow somewhere, and typically it means it's flowing into risk on assets. Given what just happened with Japan, this may also sound the signal to start to move back into risk on assets. And you can imagine that Japan are going to be coming back in a big way, right? Those who pretty much panic sold, they have a rule when it comes to the trading in Japan that you have to wait 30 days before you can execute another trade in the opposite direction. This is to encourage, long-term investing and not short-term trading and speculation, jumping in and out of the market. So once 30 days from now comes, they might look to reposition back into the market. So that is something to watch for. If you do want to trade any of these things, we spoke about this. If you're looking to trade this massive Japanese trade over here, the USD JPY, the whole unwind trade, you can do that over here on Prime XBT, right? So you got the US JPY pair over here. Looking at this as a major bottom and a potential bounce, looking for the MACD to cross back towards the upside. And then remember, you can also trade over here. If you go to the CFDs over here, you can trade, for example, the Dow Jones, which I've been charting a whole lot. You can also trade over here the S&P 500, and you can also trade, of course, the NASDAQ, as well as many, many other pairs, including crypto, right? So there is an exchange link below if you do want to take advantage of that, because they're offering a 20% sign-up bonus, which is a limited offer. That's only for now. So if you deposit $10,000, for example, you'll get 20% on top of that to trade with for free. And you can opt for, if you have a smaller account and you prefer the savings on the trading commissions, 25% discount if you use this particular link, which is in the description below. There it is. All right. Continuing on over here, we also looked at the VIX. I have a new chart which I want to show you today, and the correlation between the VIX and Bitcoin. But this is simply just looking at the VIX, which is the volatility index for the S&P 500, with the S&P 500 chart overlaid above that. And what we've seen is the circled areas over here are, of course, the biggest spikes into those zones, and they have all marked very, very significant lows within the stock market. This didn't catch the exact low in 2008. You did come back down, test that one more time, and then rally on up. This was the next one that we saw, which was during the COVID dip. This one got literally the exact low over there. Stock market ripped towards the upside. VIX spikes up again due to this whole Japanese trade over here. Price comes down very, very slightly in comparison to the previous ones that we saw. But essentially, you're looking at within the next couple of weeks, price to continue towards the upside and the VIX to contract back towards the downside. And these contractions, like you see over here and here, is what causes those bull market moves towards the upside. So you can still view this as a shakeout. But what happens when you compare Bitcoin to the VIX? Well, I found this quite interesting. I was having a look at this this morning, and I'll just quickly move that up to show you how it touches the trend line. So we'll move the little vertical lines. You can see touch point 1, touch point 2, and give or take almost touch, right? I mean, we can move it ever so slightly to get it to touch. Point being over here is I wanted to correlate the timing factor and see what this means. So Bitcoin divided by the VIX over here, it came into the trend line on the logarithmic chart. That was on the 1st of August 2015, the 1st of March 2020, and then again, ironically, also August 2024. What happened over here, right? What happened next when we saw that? Well, you can see over here in 2015, the 1st of September, a parabolic advancement obviously happened following that move. If you look over here in March 2020, a parabolic advancement took place. And here you have August 2024. The question remains, will we see a parabolic advancement once again? Is it possible? Well, if you look at Peter Brandt, who's one of the top analysts and traders when it comes to markets, very, very, very seasoned guy out there. He showcased what happened post-halving when you had a mega dip and how long price took to recover and break all-time highs. And what we saw over here was the decline that occurred in 2015 and 17, which this correlation seems most similar to, right? The correlation occurring right now in this 2024 bull run seems most similar to the 2015-17 cycle. We had a negative 27% dip over there, and ultimately it took 24 weeks for price to break back to new all-time highs. If you go to 2018 to 21 cycle, a 10% dip post-halving, that was a pretty parabolic run. It took 25 weeks to break all-time highs. Currently, we've done the 26%, which is pretty extreme when you consider this as a maturing asset class where you expect diminishing returns and diminishing dumps at the same time, right? So 16 weeks to date, that leaves about 9 weeks, give or take 8 to 9 weeks. Should this repeat in the same kind of way, 8 to 9 weeks, and you should be looking at new all-time highs. Now, the question you may have is this even possible? Well, let's have a look over here. Is it possible? This is something that I outlined a couple of weeks ago, actually even more than a month ago, as the potential for an inverse head and shoulders, which could potentially form over here. While price was crashing towards the downside, which I can better show if I move on to the candlestick chart over here, we were, of course, hovering down here, which would invalidate this, but only if you had a closing candle down here. So is the inverse head and shoulders play completely invalidated? Could this in fact be one of the biggest shakeouts that we've seen in Bitcoin's history? Of course it is possible, because if you move back to a line chart over here, you can see, well, ultimately we have the left shoulder, we have the head on a closing basis. And last week I said the best thing that we could see was the weekly candle close at around this 58K level, which is exactly what we got. Of course, I didn't expect that on Monday we would take such a massive dump, which we did. But as long as this weekly candle starts to close back above that 58K level, it can still keep the hope alive. You're coming off low volatility, as you can see from the Bollinger Band with percentile over there. It is starting to expand. So bulls need to fight back very, very soon. But should they get prices back above 58, 60K on a closing basis by the end of this week, the hope is still alive. And then you can look at a slow grind up for the rest of August. And then if you do approach this, well, that gives you a measured move still with a breakout from the neckline of Bitcoin pushing all the way up to 80,747. And that would therefore be in alignment with what we've seen Peter Brunt suggest. It would also be in alignment with what we've seen over here when you compare the VIX to Bitcoin and those mega expansive phases. So there's a whole lot to look at. Correction wise, we've also played out what we would expect as a typical correction within a bull market, both price and timing wise. 33.01% down from top to bottom. This being the fifth correction. We usually expect 7 to 8 corrections in a bull market. And consequently, timing wise, this has also been one of the longest at 146 days. So pushing that 5-month territory right now. We don't expect to remain below all-time highs much longer than 6 months, which is again in alignment with another 8 to 9 weeks. And you could potentially be pushing out of that region. So at the end of the day, the trend is your friend until the end of the trend, and we are still downtrending with lower lows and lower highs. So all you need to do is manage your risk and be careful as price spikes up to potentially put in a lower high. We'll talk about the lower timeframes in just a moment's time as well. But let's take the optimistic approach and say, should the cycle repeat? Well, this is also in alignment over here with what happens following the halving cycle. The grind into previous all-time high resistance takes 12 months, right? Before you set in the cycle peak. That was the first cycle. The second cycle from halving to cycle peak, 16 months, right? From halving cycle to cycle peak, 17 months in the following cycle. And therefore, we've estimated our timing target. And let's just quickly move this into the middle because I am a little bit of an OCD person. There we go. Our timing target would line up somewhere between May and October 2025. So where are we within the cycle? If you relate on a chart and you say overlay all the different bull cycles from cycle low to current levels, where does this place us, right? Well, have a look over here. Let's remove cycle 1, which is going to be the blue one, because that was straight up and parabolic due to, of course, the low market cap that crypto had. So we're going to remove cycle 1 and give a better viewpoint over here. Okay, this is cycle 2 Of course, 2013, also pretty aggressive price rallying all the way to the top over here. We currently on the purple line. I'm going to zoom in ever so slightly just so you can see that over there. That's where we are. We on this cycle over here, which is the purple one, pretty much in alignment with what we saw in 2017 as well as 2021. So therefore, this could be the expectation for what comes next, right? A pretty parabolic movement, and that should happen relatively soon. If you look at that chart over there, the expectation would be that it shouldn't take too much longer before we actually do start to see that kind of move. If it is going to follow the cycle, it best to get moving sooner rather than later. So where do things flip bullish? Long-term, high time frame bullish again. We need to get back above what I previously labeled the safe zone. Break back above $60,000 and start to hold there. I'm going to delete this over here to clean the chart up, but that's where we need to get back above. We need to get above the 21 exponential moving average. There's going to be a massive amount of resistance, and the bulls have a lot of hard work to do to get through this particular level over here. But so far, the weekly candle shaping up to look really, really good, right? Nice long wick over here. Can you imagine if this candle actually starts to turn as a full-bodied green candle? Does that mean you should FOMO into the market, right? If you sold the exact bottom, what should you do now? This was an amazing question that I got from one of the members yesterday in the Whale Room live Zoom session. We're having a little bit of a psychological chat of what you should do next. I would remain patient, right? I wouldn't chase price action. Oftentimes, price will come back and revisit 50% of the wick. So you can measure out 50% of the wick. At some point in time, you're probably going to come to fill this imbalance or inefficiency within the market. So you may see price range, right? The probability of price ranging is much higher than the probability of a V-shaped recovery. Remember that markets range for about 60 to 70% of the time, and they trend for only about 30% of the time. Therefore, the chances of this ranging is much higher, which means you should still get an opportunity. Remain patient, right? As B2CC says over there, patience is the key. Patience is the key to success, and patience in trading is a superpower. So fear and greed reset all the way down to these low levels. One of the lowest reads that we've had, right? The last time that we saw reads this low into the teens was pretty much over here when Bitcoin came all the way down at $26,000. This was the USDC collapse over here where the stable coin depegged. That created an immense amount of fear. Bitcoin was trading then down to 19,200. And then, of course, just around those FTX lows. Those were pretty much the last times that we came into those teens. Right now, you can see a very, very clear pattern that's forming, which is a descending broadening wedge, which is still in alignment with the bullish trajectory. The descending broadening wedge patterns are very, very tricky because at the end of the day, you have a declining support and a declining resistance, which in other words means lower lows and lower highs, which is the start of a trend reversal. Now, typically, you don't really want to be longing downtrends, but in this particular case, you need to make a tough decision. Is this a descending broadening wedge? If so, well, this would be one of the best opportunities to have established a long position, looking for a sharp reaction towards the highs over here. And once you break that neckline, similar to what I showed you on the inverse head and shoulders pattern, you're looking for continuation through that level. So I'm not saying this is 100% certainty or going to happen per se, but I think it's something to keep your eye and mind on as a potential scenario, right? Because we've also seen a complete reset over here on high time frames, weekly time frames. When you look at the RSI heat map, most of the coins that were trading over here in the strong zone, bullish control, slapped back all the way back down into the oversold or weak territory. That is on the weekly. Let's have a look at the 24-hour period. Still, look at that. Most of the coins still in the oversold territory, really struggling to get out of their 4-hour time frame, only just starting to push up into the neutral zone, leaving the weak zone. So slowly but surely putting in a little bit of a bounce, and the fear and greed, I will remind you, came down to these extremely low levels, similar to what we saw during the COVID dump, right? Similar to what we saw in the bear market bottom. Now imagine this is still timing wise a bull market and you get this massive reset in the fear and greed. It's not quite a black swan event that occurred, but more a gray swan event, right? You get a catastrophic crash, but not as bad as a black swan event. It does create a long-term opportunity. You also have currently the funding rate slightly favoring the bulls. Why do I say slightly? Because this can go lower, right? Price can come back down and retest the lows or possibly even create new lows. So therefore, this can get lower, but slightly favoring the bulls, because negative funding in a bull market is usually where you want to start to establish your longs. And you can see over here the prior times, right? Leading to pretty big bounces. Here you have it, negative funding, big bounces, right? Look at all these times. Negative funding, big bounce. Negative funding over here, that ends the bear market. That was the most negative that it got. Prolonged periods of negative funding ends the bear market. We form a ranging market. Now, this could be something that you'll see, right? Is that ranging market similar to these FTX lows, continuation up, and boom, bounce from that region. So what are the levels to reclaim? There's a lot that needs to happen over here before bulls take back control. This is going to be a massive, massive amount of resistance, right? Currently, we're pushing into the 0.382 fib. We have the 0.618 coming in all the way at $62,000, but I'm doubtful whether you're even going to get there without a pullback. As price pushes up over here into the pink zone, this is going to be a lot of resistance. The level will change every day, of course, as price action unfolds. But right now, it's between that $58,000 and $59,000. Look for weakness over here and the potential for a pullback. Remember what I said, the chances are higher that you're going to have a ranging market as opposed to a straight V-shaped recovery out of here. Similar to what we saw at the FTX lows, you're looking for chop like that, and therefore you should have time to reestablish positions. You don't necessarily want to be chasing price. I'm also going to talk about what's the best crypto bet that you could make right now, so stay tuned until the end of the show. I will get to that point. Getting back above $59,000 will start to shift the RSI back up, and then you got to contend with all these MAs and EMAs. Now, if you do start to reject from these levels and you break to new lows, of course, the next major target in play becomes $40,000. And if you look on this chart over here, that means you would be sweeping the yearly open. I have the yearly open marked off over here at 42,229. And this would be in one of the worst case scenarios, would be a spike up and another rejection. I would imagine that something pretty catastrophic still needs to happen when it comes to the traditional markets in order for that to actually take place. And given the new information coming out from Japan, it looks like that's less likely to occur. If we look at ETH, you'll see ETH already swept the yearly lows, right? It created new yearly lows. It swept the yearly open, which was all the way down here. This is where Ethereum opened for the year, 2,280. And ultimately, this thing looks cooked. It's had a really, really, really tough time. And we're going to talk about that as well in today's show. Okay, low time frame. Simply, we've just been governing since the whale room live yesterday, just simply governing on the low time frame, the high highs and high lows. This is essentially the level to defend, 54,208. If you want to be aggressive, you could probably run it over there at 55,440, just monitoring the high lows. But you can see the high highs are starting to weaken, right? As we approach that major resistance around that 58K territory, there is a possibility of a pullback. So please do keep that in mind. Here's ETH, right, coming all the way back down to the bottom of the range, prices that we last saw last year in November, as well as in April 2023, revisiting all the way there. There is demand that's come in over here, but there's a pretty big shift in market sentiment around people's attitude towards ETH. And we have to look at the actual data to see, is there validity behind this? Is this, the way to be thinking, which is switching from ETH into one other coin? We're going to talk about that. You currently have ETH BTC also still coming down, looking for a bounce from the lower low into maybe another lower high. We said no point in getting uber bullish on ETH BTC until such time as you properly reclaim 0.0551, which is the white line over here. That was the previous range level. So when we have a look at the various different dominance charts, you can see a notable trend which is occurring over here. And that trend is that Solana and Bitcoin continue to move towards the upside. Sol BTC dominance is up. Solana ETH dominance is up. Sol dominance in terms of the overall market cap is up to 3.54%. Bitcoin dominance is up to 57%. And then where's ETH, right? Where's BNB? Where's ETH BTC and Sol BNB? Well, those are all running going towards the downside. These were the previous majors of the last cycles. They lasted, I would say, 2 or 3 cycles as very, very, very strong bets. But the times are changing, right? This is from 𝗕𝗕𝗕𝗕𝗏. Thank you so much for that. Really, really great, spread of information over here. So what does this mean? Well, he's also speaking about this over here, 𝗕𝗕𝗕𝗕𝗏. He says, in his opinion, Jump Capital, which were dumping massive amounts of ETH over the weekend. Now, given this is quite a strange time to be dumping when the liquidity is low, while Grayscale also dumping a lot of ETH, he says he believes that they're rebalancing. It's playing out in real time. Why? He says because 𝗕𝗢𝗏𝗕𝗧 is going to run the Nasdaq and retail stablecoin Rail. That is, of course, 𝗕𝗢𝗏𝗕𝗧 on Solana. And he says Solana is heading for 7% dominance in his opinion, and ETH all the way down to 13, which would be pretty unreal, right? 3.5% to 7 doubles Solana's dominance, and ETH down to 13, of course, is going to wipe off a big part of the market cap. Now, there's a big repricing that's currently taking place. A lot of people are moving into Sol from ETH. Should you be doing that? Is this the best bet and trade you can be making in crypto right now? Well, if you look at this chart over here, he has Sol BTC. We can actually look at the facts, and the facts are that this is damn bullish, right? Very, very bullish chart over here. Higher highs, higher lows, and price looking to push all the way up. Recent times you've been making equal highs. This becomes the range high, and you're looking to grind into that level and potentially break out. Well, what about Solana against ETH? Well, this one has already started to break out, and this is why you're starting to see a lot of bear posting on ETH. Now, what I would say is always a possibility when you approach a range high is that you could get that deviation, right? Deviation, and you come all the way back down into the range. But given this over here, we've had a deviation. Now you have multiple candle closes above the breakout level, and this is actually starting to look like a very real breakout. So it looks like ETH is the better, it looks like Solana is the better bet. I must say, charting wise, full body closing candle over there, new daily candle opens above the range highs, and Solana looks primed to move. When I woke up this morning and I looked at my portfolio based on the bounce between ETH and Solana, I literally thought to myself, even before taking to Twitter or X to look at what the sentiment was, I thought, man, this is crazy. Every time Solana just seems to be the better bet. And this is why Solana is my biggest position right now. I think that, it's really, really changing the market sentiment at the moment, and people are unable to deny that. So what is the best trade you can make right now? Well, for one, you can start to look towards the Solana ecosystem. Secondly, if you are ever going to be deploying new dry powder or new capital into the market, think about these types of charts before you decide to put your money into ETH over Solana. I'm not saying that ETH is dead, not by any means. I'm just saying that right now, this is the fastest horse. This is the pedigree horse at the moment, at least in my eyes, and that's why I'm betting over there. Now, if you look at the dominance between the peak of 2021 versus the current cycle, what we saw is Bitcoin dominance was at 40%, ETH dominance at 20%. That's cycle peak. Current cycle, we have Sol dominance, as we mentioned, slightly above 3%, with 𝗕𝗕𝗕𝗕𝗏's target at 7%. Now, Imagine what this could come to in the future. We are traders over here, though, so we can adapt and adjust if new information comes out and the trends begin to change. But right now, this is why Solana remains my biggest position. So Sol is the major of this particular cycle. Big repricing ahead in both absolute and relative terms. Solana and Sol memes is the place to be. And I've been dropping a lot there in terms of Solana and Sol memes, right? If you go over here, I have been giving a whole lot of information in terms of memes in general. This is in the DGen calls chat. We up massive double, even triple digits on some of these trades that we took over here. Retardio, Brett, Ponky, Pepe, Resistance Dog, Popcat, Book of Memes, the Harry Potter, Obama, Sonic 10, Inu, When. We have Giga Chad that we added into the position as well. Resistance Cat, massive gains over there with the meme coins pumping very, very, very hard. And you have, if you look at this tweet over here, before we go into Solana, this is from Mustap Murad. He showcases over here, the percentage bounce from that dump that we just had over the course of the weekend. And what are you noticing? The shift over here is the meme coins are pumping the hardest, and it's the Solana meme coins that continue to dominate, right? The Solana meme coins are still pushing up, right? Giga up 125%, pretty huge moves over here. Lock-in 253%, Popcat 131%, some really, really sizable triple-digit moves. So if you look over here, Solana pushing up, right? ETH only up 1.1%, Solana up 4.3%. Good moves over there. If you can pick up some Solana, if you do get a revisit back to the lows on Bitcoin towards $52,000, this is going to be an area of interest. $120 where you can start to reprice some of your portfolio, move into Solana, right? Move out of the weak things into Solana. It's not the only strong one, right? Of course, we've spoken a lot about Casper as one of the best trades out there as well. The similar trade, if Solana came down to 120, Casper comes back down to 14, that's where you can be a buyer of Casper. You can start to reallocate. I did load up on this dip, right, when it was down here in this 12 to 13. All of this, of course, dropped ahead of time in the Whale Room Discord. So Solana, we're keeping an eye out on here. Where does bullish momentum really start to shift? Well, if you get above the breakdown level, break back into the range, I would love to see it trading above 170 over here. That will start to look good for Solana. At the end of the day, this is going to be resistance, right? We played level to level. This is resistance. If you do come into the zone and Bitcoin starts to reject from that 57, 58, and you come back down to 52K lows, expect Solana would do something like this at 120. Watch the ranging market. 120 becomes an opportunity to look for positions. And later on, I'm not a price target kind of guy, but I think Solana, sitting at $400-500 by the end of the cycle is definitely on the table, definitely a real possibility. So Giga, one of the trades that we took as well over there, pushing up really, really nicely. Let me know in the comment section if there's anything particular that you would like me to bring up chart-wise. So let's see, what else have we got over here? Giga's up. Let's see, resistance cat. Okay, resistance cat. Can that be the correct market cap? I don't know if this thing's updating properly. 59 million, it was at like 1.5. I don't think this is correct. So just keep an eye on resistance cat. But at the end of the day, looking to break back into the range over here. Let's see, what else have we got? Let's see, 𝗕𝗘𝗣𝗕𝗣 was also pushing up pretty hard over here. $87 million market cap. Just let that load up. Okay, nice big move. We established our longs down here at 0.051. So holding that position up really, really nicely over there. Let's see what happens with the rest of the market. Okay, we'll definitely take some altcoin requests. I'll move this up. By the way, for those of you out there who are looking to take some trades and you're looking for a non-KYC exchange that gives you airdrop opportunities at the same time, and you can win a whole suite of Apple products, go through to the link in the description below, 𝗕𝗓𝗓. If you go through to 𝗕𝗓𝗓 over here, it is in the link. Let's just see. There we go on the top. If you go to 𝗕𝗓𝗓, you can win an Apple Series gift pack by trading on 𝗕𝗓𝗓. Simultaneously, you're farming for an airdrop, right? The more trading volume you generate, the more points you get. The airdrop you in the form of the WXT token. That's the 𝗕𝗓𝗓 token. We've seen what some of these exchange tokens can do in a bull run, right? And that's free, right? Free if you use that link in the description below. You also get a sign-up bonus. All right. Continuing on, let's see Sui quickly. So Sui all the way back down to range lows over here. Let's just quickly shift this up. Let's clean some of this up over here. Okay, it did break the downsloping trend line, came back, failed that level. You need to see a lot of work. I wouldn't run into Sui long over here. Personally, I would wait for this to really show signs of strength, right? Need to see a big push up, maybe the next high low. This is why don't rush, right? Let's see TON. Okay, TON came all the way back down to 480 over here. 480 seems to be holding that level. We said watch for a potential range to develop over here on TON. Okay, this is why I'm pricing, or at least why I'm bidding resistance cat as well as resistance dog, Redo and Rika on TON as a leverage bet against Telegram, because I haven't got the perfect levels on TON, right? For me, the perfect level to regain a spot entry on TON would be all the way down here at 326. And I'm not sure that we're going to get there, right? 326, it will take a bit of time. That is still percentage-wise how far away? 44%. All right. Okay, let's see. Comments. Render. Let's have a look at render. The only problem with render is kind of hard to charge to chart because they changed their ticker. So I want to see if I go to one of the old ones. Is it still trading, right? On the old one? It should be, yes. Because this gives me much more information. The RENDER ticker is not looking too good. Okay, there we go. Hit that key level. I mean, that's the zone that you want to hold. Levels to reclaim. Pretty close to where it's at now. This is the zone to get back above, which is going to be $5. You want to see it get above $5, but that wick could have been a capitulation candle. You might see, something like this again, similar to the rest. Revisit the lows. It's going to take time, right? Guys, just understand, unless there's massive, massive money printing that comes into the market, when you see a downtrend like this, it's very unlikely that we're just going to V-shape out of here. The most probable outcome is this for all the coins, which means that you want to mark out the range levels nice and clearly like I've done over here. And then you want to watch if there's a deviation, you can short this with leverage, right? Down to the mid-range, maybe take a bit of profit over there. If you're lucky, you get back down to the range low. And all you're trying to do is outline nice and early, following a move like this, nice and early. This is the best time to do it when you see a big move. Mark out early where the potential range level could be. So where is price going to hold within that range, and then trade that range? I would probably make the range low somewhere near the middle of the wick because I think demand will come in over there. So this is more or less the range that I would be expecting on render, as well as many of the other coins. Okay, let's go to some of the memes. Pepe, you guys say Pepe. I don't know how Pepe is doing, but let's have a quick look over here. Pepe, where are you? Let's see. Okay, I just want to see. Okay, let's just look it up. It just takes too long. Pepe, USDT. Okay, there it is. Okay, so. All right, same thing though. I would be expecting a ranging market over here. These are, of course, the main lows. Let's just mark out the mid-range. All right, let's get that range tool. There we have it. Okay, so watch for a little bit of resistance coming up over here. You can see all those previous wicks, resistance, support, possible resistance over here, 8691, and then trading that range between those levels. Okay, let's go to Brett. Where is Brett? Brett. Too many coins, guys. Brett. Try that again. Okay, here's Brett. So Brett's still holding up over here. Your major resistance level is going to be coming pretty much from the 10 cents region. 10 cents will be a little bit of resistance. And then your big mega resistance is going to be 12,278. 12,278. Let's just move that back. 12,278 for Brett. Okay, WIF. Yeah, let's have a look at WIF. Okay, you are getting a bit of a move on WIF, 18% up, but remember this thing is absolutely nuked. So 18% after a 63% dump is not the best. Looking to hold above this particular level over here at 1.5. That breaks you back into the range. You view this as a little bit of a deviation, and then you can start to trade this back to the top side. Okay, Bitcoin dominance still climbing. Total 3, we want to break also back inside the range over here. Total 3 is already turning green. Bitcoin USD has not yet turned green. And that's it from me, folks. I'll see you all on the next one. Remember, use the links in the description below. Participate over here in the Apple giveaway. And then feel free as well to join Whale School. You have 14 days left to sign up. I'll see you all in the next one. Have a great day. Cheers for now.